Welcome back. The Reserve Bank has left interest rates unchanged. Does that help the real estate sector, which has been reporting slower and slower affordable home sales? Also, Macrotech developers reported very strong pre-sales growth of 30% in the first quarter, but completions-wise, there was a fall and fairly significant at 42%. For all things macro and micro about the real estate space, I have with me Abhishek Lodha, Managing Director and CEO of Macrotech Developers. Abhishek, good morning, and thank you very much indeed for joining us. Does this rate stability come as a relief? Basically, I want you to know whether this pain, want to know from you if this pain point in the affordable segment is likely to abate at all.
Hi, Lata. Good morning. We believe that, the fight against inflation is an extremely important one because ultimately India is on a 25-year growth journey and keeping inflation predictable is very, very important. So the RBI has done exactly the right thing over the last 4 to 6 quarters in trying to control inflation. And I think we're at a point where while there may be some food price variation in the inflation picture, but generally inflation is well under control. As a consequence of the rate hikes which happened over the last 12 months, since March of 2022, we did, of course, find that real estate and housing demand kept going up in spite of those rate hikes, which really is telling you about the fact that we are in the early stage of a very long-term cycle on housing demand. And India's housing sales, which are a very small percentage of what you would find in other large economies, including much more developed economies like the US, are going to rise at an exponential rate for many, many years to come. Within that space, yes, over the last 9 to 12 months, we've seen that as rates have risen, you've seen that there's been an impact on the ability of the affordable housing buyer or the early stage mid-income housing buyer to get the right quantum of home loan. And that in turn has led to a situation where that segment has been weaker in demand than the other segments. We do think that will need some rate cuts to come in before that segment starts growing at the same pace as the rest of the market. So we think that rate cuts are probably 2 to 3 quarters away. So we'll have to see how that evolves over this time period.
Okay, it's just that at one point in time, a few years ago, it used to be 65% of the total number of houses sold. Now it's come to half. And that space is being taken by mid and, more importantly, the premium segment. Time permitting, I'll come back to the macro questions, but now to the more micro questions on Macrotech. Abhishek, you all have been speaking about digital infrastructure, especially with respect to Palava. Can you elaborate? Is it that you're going into data centers? How does that tie in with your residential emphasis?
Lata, for us, digital infrastructure means the infrastructure which is needed to serve the needs of India's new economy, the digital economy, which includes warehouses for e-commerce. It includes industrial space which is required for new age companies to manufacture or package their goods together. And it, of course, includes things like data centers. We don't do data centers because from our perspective on a highly sustainable development, data centers does not seem to be an asset class which works for us, given our focus on becoming a net zero carbon emitting company in the course of this decade. Having said that, we are doing a large-scale effort to scale up our industrial parks and warehousing business. We have a platform with 2 leading global investors, Ivanhoe Cambridge, which is a subsidiary of CDPQ, the Canadian Pension Fund, and Bain Capital, which is a well-known US investor. And together, we're building this digital infrastructure platform across the company, including at Palava. Our idea here is that as infrastructure is built up in any location, jobs are created, then those jobs in turn create demand, including for residential. And that becomes a win-win, both for creation of infrastructure as well as residential demand.
Okay. Is the nature of that demand different? I mean, would it be a house is a house is a house? Or is it more affordable because of the nature of the population, more coders and data guys, data capturers who would get jobs there? And anyway, how are margins there?
No, though you're right about the fact that the nature of demand is dependent on the nature of the job, and therefore where you see that the job creation is sort of more at the entry point, then the kind of housing required is linked to that, i.e. affordable housing or entry-level mid-income housing. Across all the different segments of our business, whether it is at the premium end or the mid-income end or even the affordable end, we find that margins are pretty stable. We have our EBITDA margins in the low to mid 30s, and that's pretty similar across different price points. We believe our margins are delivered by our operational efficiency in terms of what kind of product we can create and how quickly we can deliver. And that I think is a unique strength we have, which we're able to leverage across the different segments, being one of the only real estate companies which plays across the entire spectrum, all the way from super luxury down to affordable.
Oh, of course. But, price growth, your data, your Q1 press release indicated has been only up 1%. Does it make up for raw material cost increases?
Lata, we report price growth on a YTD basis. So what you see on the for the first quarter is the price growth from March of 23 to June of 23. Our annualized price growth target is at between 6 to 7%. Last year we delivered about 8% price growth, and we want to keep price growth for housing below wage growth. Because we believe that only by increasing affordability can we increase the volumes to the level that they are required to be grown to. So our stated strategy is to keep price growth below wage growth, because that is what will enable much more larger percentage of Indian families to buy a high quality home. And this is something which we have repeatedly articulated, and we call upon the rest of the industry to not get carried away by the demand buoyancy, and to ensure that price growth remains at or below wage growth, because that's the only way to have a long, sustainable cycle and capitalize on the huge opportunity for housing growth that India has today.
Mm-hmm. That's both ethically sensible as well as, management-wise, even commercially a sensible thing to do. Let me come to another point. Your split of business, 33% came from ready-to-move homes, 32% from under construction, 32% from new launches. Will this more or less be your split and the industry split?
I think the split varies. I think the fact is that our percentage of under construction sales is going to keep going up as we have been doing more launches and more product has moved under construction. And the percentage of ready sales will, as a percentage of sales, come down because of the same reason that this is a build-up of the inventory which happened prior to COVID, but that inventory has now started abating quite a bit. So generally, we feel that the mix of sales will move more towards early stage and mid stage from the highly credible developers because the demand is far ahead of the supply.
Okay. Let me ask you the more bread and butter questions. So, what targets have you set for the full year in terms of revenues and bottom line?
We, Lata, are aiming for a 20% growth in our top line. Last year, we delivered about 12,000 crores of pre-sales, and we're looking at about 14,500 crores of pre-sales for the fiscal 24. In terms of our EBITDA margins, we are guiding to about 30% on our EBITDA margins. As we've stated earlier also, the Indian accounting standards lead to revenue recognition only on completion, which is not really a real reflection of the business. And therefore, one has to look at our pre-sales and our embedded EBITDA margins to really understand the underlying state of the business.
Okay. I get your point. Yes, completions, I'll, time permitting, come to that. Redevelopment is becoming big in Mumbai. You're not interested?
We do everything that makes sense from a perspective of doing high quality product at good locations. We are not a land company. We are a development company. So, people will quote unquote cook the land, whether it is redevelopment or any other source. And our job is to take the cleaned up piece of land and to create the best quality product in the most sensible time frame in order to generate the ROEs which we target. We as a business target ROEs of 20% or higher or across our whole portfolio. And so really, that's really our focus. We are a development company. Land is a raw material for us. We can do the land from whoever gives us the land.
Got it. You're very much a Bombay guy, but now into Bangalore. How is it different?
Lata, our focus as a business currently is in the MMR, the Mumbai region, and in Pune. Pune, we now have 5+ operating projects, and that is growing quite well. In Bangalore, we are right now in what we call pilot phase. We have 2 projects which we've acquired on joint development basis in Bangalore. We are intending to launch 1 project in the next quarter and hopefully the second one by the end of this financial year. We find that Bangalore is a good market. It is good end user demand. We did a lot of study before entering Bangalore, and we want to use these next 2 to 3 years to really understand the market very well, deliver on our products, make consumers understand what the Lodha difference is, both in terms of product quality as well as service quality, and then expand in Bangalore. So Bangalore will start being a meaningful contributor to our business only from the middle of this decade.
Okay. Well, I have too many questions, but the time is short. So let me fit in one vision question. Do you see yourself in, new areas, like, for instance, assisted living or veterans' homes, retirement homes, something like that, where there is both a home and a service packaged?
Lata, we are a housing-focused company. And we believe we are by far the best producer of housing in the country. And definitely we look at all the other need segments that are there within that larger housing space and try to ensure that we can deliver on that. If any segment is large enough to warrant our attention or there is a gap in terms of the service quality, we will definitely look at it closely.
Okay, so you're telling me that it's not yet become that important or compelling proposition. Fair enough. I hope it becomes before I retire. Thank you very much, Abhishek Lodha. I'll take a rain check from you for a more detailed discussion later. Thank you very much for joining us. Well, we are wrapping up on Bazaar on the note that the equity markets are still downbeat. Bond yields have also gone up a bit. It's not one of the best days in financial markets, but the day is young. Let's see how it pans out. Chartbusters comes up for you.